Hello, guys. How are you guys doing? Today is Friday, May 8th, 2026. Over the past couple of weeks, I have been on a losing streak characterized by significant inconsistencies in my win rate. This led to me going on tilt. While March was a great month, April was horrible, and so far, May has continued with these inconsistencies. I had to take a step back to analyze the situation and identify any patterns in my analysis that could explain why I am losing. My data suggests that the market was much more volatile than usual in April and has remained so in May. Although the market is at all time highs, as a day trader, someone who trades on a very short time horizon, I have seen my solid strategy get chopped up. When volatility spikes, price action often becomes noisy. The price might eventually move in my intended direction, but it takes a much more violent, erratic path to get there, often dipping deep enough to hit stop losses before reversing. I have even observed erratic price action occurring within a single second. The markets have been grinding higher, but not without significant volatility. I didn't see the signs until I looked back, but I have now identified setups within my analysis that pose a threat to my strategy. On those days, I will gladly sit out. However, I face a familiar dilemma. Forcing myself to sit on my hands means I may not be in the market for several days each month. Many day traders claim that volatility creates a great trading environment, but when I listen to them daily, they seem just as frustrated as everyone else. Choosing between sitting on my hands and trading constantly is a personal decision. Choosing the former will provide the mental break I currently need. I will continue to observe the markets daily, but if the charts do not align with my specific requirements, I will not trade. This account is hanging by a thread with only about $50 of remaining drawdown. However, there is still plenty of time on the clock, and I will trade the remaining days as carefully and to the best of my ability. Either way, I will take away many lessons that will help me in the future. All right. So this is my abysmal calendar for the month of May. Yesterday I took I didn't have much. Only had $70 remaining of drawdown. I took a loss on that. I said I really didn't want to blow the account. I said, it was hard to see me end up with $50 or 40 at one time. But I was just like, you know what? Maybe, just maybe, there's a possibility another day. I know this account is pretty much gone, but maybe there's still a chance. So I just said, you know what? Just leave this account. Just leave it alone. Just get out. Okay, I was on the verge of just letting it go. Just go ahead. Just cancel this just fail this evaluation. At the open, I was expecting the price to rise. This is yesterday. Yesterday at the open, I was expecting the price to rise, but I immediately felt a sensation that it was not going to do so. I sold my position at a loss and flipped into a short. The market had a decent sell-off, though it didn't move as much as I would have expected, falling 3 points short of my target. When the market started reversing, I closed the trade, reducing my overall loss for the day by a small amount. I quickly decided to leave the markets alone after that. I was surprised to see later in the day that the market ended up down. So yeah, as you can see where I have kind of like the arrow drawn, that was the 9:30 US Open. I was anticipating a quick scalp for 16 ticks at the open. And then once the bell rung, I realized that it was starting to push down. I was just like, I do not think that this market is not going to is not going to go up. It's not going to hit my TP. So I said, you know what? Let me close it. I closed. I don't know why. I just closed it and started selling. And I was thinking that was going to be more of a hard sell. I had my what did I have my stop? I was trying to make up, for the loss I had taken on the first trade. So I think I had my loss or my TP at 65 ticks. And it started to come down, barely came there, Should have just taken could have just taken the profit or thought, but I wasn't thinking about taking. I was hoping that it was gonna hit my TP. Started reversing, and then I just said, you know what? Let me go ahead and get out of this trade. I was a little bit in profit still, and I just reduced because it was like I took a $17 loss on my first trade, around the $17, and then overall I had like negative $13 overall loss. But it was just like I was just like, let me get out of this market. Yeah, you could see that it started to grind higher, hitting my initial TP, surpassing that, and then but it was ugly. The market it was very ugly, and so I just say, you know what? Let me just get out of this. And then came back later in the day, just looked at the charts, and I was surprised that you had a bit of a sell-off here, later in the day. All right. My funded futures plan for the rest of the month. All right. I have 13 trading days remaining before my current evaluation plan expires, which expires May 30th. I have excluded May 25th and May 26th because of the U.S. holiday. I believe it's Memorial Day on the May 25th. I do not want to trade on half days. The market could still be open on Memorial Day, but maybe it's for a half day. They have shortened hours. But I do not like to trade on U.S. holidays. Sometimes there's a major component that's not trading. It could be the bond market. Even though equity market is still open, the bond market may not be trading. And then I feel like that causes, like, I don't have all the information. I don't have the complete source of information. And that could, some days it can work and some days it doesn't. So I just say avoid them. And then the following day as well. There is still a possibility of succeeding, but the margin for error is extremely small. I'm looking forward to trying. So yeah, margin for error is extremely small. Only have a drawdown balance of $50. But I only need 8 opportunities. So I just got to sit. Already so far, looking back for the month of May, there's already been quite a few days that I should have just sat on my hands. I would have sat on my hands most of the beginning. For the most part of this week. So hopefully things clear up. There's a little bit less volatility. Hopefully, I don't know what's going on with the deal. I haven't checked the news today, but hopefully there's things. This whole Iran situation is starting to clear up. Maybe there's a deal in place. I don't know what it's going to be, but I hope I do not see any more volatile setups if I want an opportunity to trade this. If I want an opportunity to possibly make it out. But anyways, and that's that. I always like to draw up a plan for myself, just kind of see, just kind of play out how things will look if I was to, succeed, have some consistency in my trading. I would like to see, like how many days, how much I would make, how I would scale into my trades each day and stuff like that. It gives me like a little visual. And sometimes when I see the outcome, it gives me a little bit of encouragement. I go like, wow, this is how much I can make. Do I often succeed in those plans? No, but it gives me some encouragement. It makes me feel better. The point is that, having a better ratio, instead of looking, before, I was only just scalping 16 ticks a day. And now finding the possibility of having a 16 tick day rather than 16 ticks is extremely beneficial. But again, it all works. It all comes back to the same outcome. Maybe if I'm only scouting for 16 ticks, I can trade probably, or more of my trades will probably work out. 16 ticks. In and out of the market, 16 ticks a day. But going for 65 ticks, right? Maybe there's less opportunity, but the outcome is more or less the same. Probably greater with the 65 ticks. It's just, I have to be extremely selective. Extremely selective. So that's what I'm going to do. It's just a simple 3 requirements that I have to have in my charts in order for me to trade. And I'm just going to try it like that. Because without having those 3 requirements, in a lot of the charts that I had in April, I realized I didn't have all 3. And I was like, well, maybe this is the reason why my edge is not panning out as I anticipate. And if you're taking notes, because I'm always taking notes, I'm able to look back and know exactly what I did every day. Look at my strategy, look exactly, at my notes and how I came up with my, what I'm going to trade. How I'm going to trade. And over time, I have a gathering of data that I can go back and it will reveal certain things. It will reveal certain patterns. If I'm not executing, the charts would look similar. My analysis will look similar on the ones that I don't execute on. They will all have a similar view. I'll be like, oh, well, maybe I need to make a change. I need to make a change here because all my losses, analyzing all those charts together, they're all presenting the same thing, similar thing. And that's how I'm able to come up with rules. Now, it just so happened that March was such a great month. I didn't see so many of these particular charts. So when I came into April, if I don't see it, I'm just following my plan. I'm like, damn, I'm going through my strategy. I'm doing everything that I need to do, but it's just not panning out. I'm just like, oh, something that I didn't consider before. I said, oh, so it's important for me to take notes all the time. I have every day. I can go back on any day and I know exactly what I did. So when it comes to back testing, when it comes to utilizing market replay, it's easy for me to test out, to simulate a lot of to go through simulation. And like I said, me taking notes is how I'm able to develop rules for myself. Is I'm able to figure out what to avoid, what to what works best, what doesn't work. So it's helped me a lot. But anyways, do I have anything else? Oh yeah. So today there was no data present when I ran my script when I didn't have any data. So to me, that is when I don't have any data, that means a no trade. All right. The market is positive, but looking at the market, you could just see that it does not want to go down. It's just a violent, volatile grind higher. Now, if you're a long-term investor, you're just dollar cost averaging, good on you, right? The market is looking really good. Is the higher market? Now, if you were just invested in like S&P index funds, of course, it's looking really nice. But, not all companies are benefiting from this rally. I keep a portfolio on FinViz, a simulated portfolio. Not all companies are up. But overall, if you're in the S&P, it's good. But as a day trader, where we look on extremely short time frames, it's been volatile. Yes, the market is at all-time highs, but trading this is exactly what was what I mentioned earlier about volatility. It's just the price action. The erratic path. The wicks. It'll eventually go up, but it'll do a bunch of stuff in between. Stopping me out or whatever, or to paint a picture. We anticipate the market doing something and then it does the opposite. I had to take a step back and be like, okay, what's going on here? And it's also good for my mental. To not, when things are going well, when I'm executing and I'm winning trades, I get more and more energy. I feel well. If I'm starting to lose, I start to go on tilt. It's a time for me to take a step back, to regain myself. When you're winning, it's all good and gravy. You're not sick. You have energy for the world, everything. You're in a happy mood. But if it's time for me to be more selective, to come up with solutions to help to kind of get my rhythm back, then I'm going to do that. And right now, the solution that I've made for myself is going to, hopefully we get the setups that I need. But if it doesn't, it's going to have me sit out of the market more than I did in March, more than I did in April. And I hope that the solution works. I hope that the 3 major requirements that I set for myself is the solution, will help me. And that when I don't have those requirements, it is letting me know that, yes, the market may be at an all-time high or the market may be doing whatever. But when it pertains to your execution, this is not the right environment for you, for me. That's all I want. It could be at an all-time high. It can be at an all-time low. It can be consolidating. I just want to be in position in an environment where it works out for me. And I believe that my analysis displays that for me. And good. The only drawdown is I won't be trading every day. So that makes it challenging when you have evaluations that expire within 30 days. But I only need 8, and even fewer if I had a new account with a new fresh drawdown. I don't need that many days. All right, I was hoping that what the route that I was going at before this, that, oh man, I could trade every day. I could trade every day except, for certain days. But most of the part, I don't have to give up any trading days. But I realized that we came across this point before because, there's going to be seasons. There's going to be environments in the market where it seems like it's perfect. And then the following month, things change. Or for new traders, the first week is really good, and the second week is bad. There's always seasons. Always, the market conditions are changing. The goal is to understand the market condition that is present. We're so blinded by all-time highs. But we also must realize that we're in a volatile market. There's a lot of volatility. Even though markets are grinding higher, markets are very, very volatile at this time from a day trading perspective. It's going to be hard. It's going to be hard. And I listen to a lot of people on a daily basis that, and this pretty much comes from your experienced traders too. And they're, that's been trading for some quite a time now. Volatile environments is good. Volatile, in my opinion, volatile markets is good to a certain extent, because if you're wrong, if you can correct the mistake and get back in, there's usually enough price action to make up for the loss. Like yesterday, I had a gut feeling that, this is not gonna take out my 16 ticks. This is not gonna go to my TP. I'm gonna jump in. I'm gonna take the loss and go in the other direction. And there was enough market momentum that, could have made up for it. That's all I see as volatile markets. It's enough price action, enough nonsense and erratic behavior going on that potentially you can make back a loss rather quickly. I don't like that. I don't like erratic behavior. Screw volatility for me. And then, but that's very rare where you make up your money. It's very, very rare. Or maybe you get a big win. You get a large 30 point win, 40 point win, and you're like, I like volatility. And all the other days you're frustrated because your trades are not working out. Volatility to me is crazy price action. Bunch of wigs. Anyways, these are just my personal opinions. All right. But I hope you guys have a great weekend. And I look forward to Monday, because that's when my significant other comes back from Germany. But so far it's been good here. The kids and I do need to clean the house. And I'm just thinking about my performance so far. Just taking it all in and just looking forward to next week. And that's all you can do. All you can do is create a journal like I'm creating now. The only thing is I'm choosing to make it open to others, but this is for me. This is honest. I'm not, this is much of a benefit for me as it is to you guys. So I have things written out on my whiteboard as well that sits above my computer when I'm working. And that's it. I'm not going to keep on dragging on about nothing. But have a great weekend, and I hope that you guys have a great trading today for those who are trading. But just be careful. We're still in a volatile market. All right? Be very careful. Have a great day. Talk to you guys later. Bye-bye.